Rakesh Jhunjhunwala, he believes that there is positive momentum in the markets as global headwinds subside, and he had an exclusive chat with Nick Kunj yesterday, and he says that markets may continue their upward momentum if reforms come through.
I'm not surprised. I mean, we were actually December 20th, 2012, 2011 is still the 52-week low. So it was on this day, I think the index made a low of 4,540. And since there we have had nearly a 33% rise, which is a good rise. And, markets have gone nowhere for 3 years, 4 years. And I think the last 3 months have been very good. I think there's hope in the market that government will finally act. Interest rates worldwide are at extremely low levels. 30-day LIBOR is at 25 basis points. So money being cheap, there is some kind of confidence in Europe that, at least no country is going to leave the euro for the next 6 months. We don't know beyond that. China is expected to grow better. I think American economy is also showing some signs of recovery. And here I think markets are anticipating that now the interest rate cycle has turned. We are going to have a lot of interest rate cuts next year. Despite all the pessimism the market is going through, is performing extremely well with very good breadth and all technical indicators being extremely positive. So, we have to follow markets as they are. And it didn't surprise me but what has surprised me that it has risen in the last 2 months, 3 months, and it just refuses to correct.
So do you think we have all the ingredients of a new bull market in making?
Well, we have 2 of the 3 ingredients. One is utter pessimism and, the interest rate cycle turning. I don't know how good earnings growth will be. If earnings growth turns out to be good, then surely we could be at the beginning of a good market.
Mr. Jhunjhunwala, the 2003 to 2007 bull market was led largely because of earning expansion and global liquidity. If I look at the Bloomberg consensus earnings for FY14, the range is about 12 to 14%. So apart from earnings, what else could lead the next bull market?
Well, I think what's more important in the earning is the consistency of the growth. If, next year instead of 12 to 14, we get 15, 16%, and, we hope that by, say, June, July, or August, there is consensus. The year after that, there will be another 15-17% rise. I surely think markets will perform very well.
Is there a case for a strong P expansion for Indian markets?
Well, we don't know whether it's a case or not. But if money flows through, P will expand. And India historically had a higher P, than most Asian countries except Japan. So I think there could be, if there is consistency in earnings. The early signs surely say that if the interest rate cycle decisively turns, and I think that will also aid earnings growth, surely there could be a case for high Ps.
In the light of what's happening in Brazil...
And let me also say, let's see, today the market consists of 2 different markets. There are 40-50 large cap scripts whose Ps I think cannot expand. Then there is one end of the market where I think there is humongous scope for P expansion. So both could meet at some point.
So when do you think Indian markets will convincingly break out of this 4-year trading range? We've been in this 4-year range.
They could next year.
Convincingly trade above that?
Well, I would say convinced trade is if the Nifty peak has been 6,300, and if the markets go to say 67, 6,800, and then don't go below 6,300, then I think that's a sure sign that a new bull market is in the offing. And that will take time. I mean, it may cross 62, 6,300, but to cross 62, 6,300, make a short-term top, then again test, I think it's a long process.
The big event in next 12 to 18 months is that we have a general election. Do you think for the real bull market to start, we need a stable government in place?
Well, it may not, it will depend on what the election perceptions are and how the situation internationally is. If the perception of the election are that a favorable government will come, markets may discount that kind of a government even before the election results.
What do you make of the verdict of the Gujarat election?
As expected.
Is there some case now that the Indian electorate is more voting towards development?
Well, one thing is very interesting in Gujarat, that he has won 80% of the seats in the urban areas and lost 80% of the seats in the rural areas. I think this has big implications for the 2014 election.
What kind of implications?
In the sense that there is a different conceptualization about what people want in the rural areas and what people want in the urban areas. I mean, it's not, I have not heard of a victory where people have swept 80% of the urban areas and lost 80% of the rural areas. But nevertheless, I think, I was asked this question at a function yesterday. My take of Indian democracy, I think, is that, I have read so many research reports, especially by CSA. In rural areas, there is aspiration, right? And it is those who can fulfill this aspiration of a better quality of life are those who are going to get re-elected. So more and more, I think, from caste, it's a slow process. It's not going to happen in a day. But more and more people are going to vote based on, not on caste, right? But on the basis of which party or which leader they feel can help them, fulfill their aspirations better. And I don't think that aspiration in terms of subsidies. It's terms of opportunity, education, infrastructure. So I think Indian democracy, and which is one of going to be the most important events, I think, in the history of India, is the maturing of Indian democracy. It's still a slow process, I may be wrong, but if it happens, it's an extremely important event.
Fair point, that's a great point. So let me just throw in the other piece of the puzzle, which is the global piece of puzzle. Many experts are of the view that in the light of what is happening to Brazil, China, Russia, Indian markets are clearly standing out because incrementally things will only improve for us, whereas globally things will only deteriorate.
Well, see, in India's growth and the growth of the other countries is complementary. Their growth helps each other. So I'm not any expert on Brazil, China and Russia, but I don't see any reason why they should deteriorate further their markets, especially China. I have no idea about Brazilian, Chinese and the Russian markets. So I don't, it's not a point in my mind that they should go up and we shouldn't, or we should go up. And those should, but to my common sense, I think China should go up.
China should recover.
China should recover.
Could that have impact on global liquidity?
What? I mean, money will flow into China also. There's a lot of money globally. So I think for the BRICS nations, the growth is complementary. It's not, as if they can grow and we can't grow, we can grow and they can't grow.
But this year, Mr. Jhunjhunwala, Indian markets have done rather well. We can revisit the word decoupling, which we talked about in 2004, 2005. Do you think next 3 years, the decoupling theory will only get more and more pronounced?
Well, see, the decoupling will get more pronounced as the size of India's economy grows. As the size of China, America, India, the emerging markets grows, I think they'll get decoupled. And we are decoupled because I know that in 2003, the Sensex was 3,000. The Dow was in 2003 higher than what it is today. And today we are at 19,000, they are 13,000. So if you look at the last 11 years, the index, or last 9 years, the Sensex has progressed from 3,000 to 19,000 and the Dow has gone nowhere. So we are decoupled.
So, I don't want to get this one wrong for our viewers. Your clear view is that the golden decade for Indian economy was not the last decade, the best is yet to come.
100%, not 100%, in my opinion, 500%.
Why do you say that?
Because I see continuous earning growth in India. I see India growing at double-digit real, right? And I think the flow of equity into India as the size of India's economy grows and the size of the savings grow. The size of money that will come into markets is unbelievable.
So it's the overall pessimism to your mind which will continue to drive Indian markets up. There's no participation, retail investors.
No, I'm not saying. No. You are saying why I think the bull market is ahead of me. You asked me because I think continuous earning growth and the correction of the underexposure of Indians and foreigners to Indian equity. And there are two reasons why I feel the bull market is, and then bull markets feed upon themselves. Yes. Once you reach a level, then it feeds itself beyond reasonability, either through the bull markets.
So now that we've clearly established your long-term view, let me also understand your short-term and medium-term view.
Well, if you see the screen, nobody can be bearish. Market just refuses to correct. All technical indicators are very good. Breadth is very good. 52-week highs are many more than the lows. Right? Markets going up slowly and steadily. Nobody is saying but sell your wife's bangles and buy shares. So I think this is a correction. This is a rise which is not going to end in a hurry. Even a correction, I think, will take time. Is still some time away.
What about the medium-term outlook?
Should be good, at least technically. Now that government is also taking action, creating more faith in investors.
So Rakesh Jhunjhunwala is bullish short-term, he's bullish medium-term, he's bullish long-term.
Medium-term, I don't know. Could be. So it's a dicey situation. But surely short-term.
You've always maintained that trading is like momentum. Now don't get me wrong, I'm not going to discuss your book or instrument or stock you're long or short on. But directionally, your bias is to go long.
Absolutely, I am long.
The other feature which I wanted to discuss with you is that how to approach consumer names or consumer stocks. The street is divided. Some experts are of the view that consumer stocks are the leaders of this new bull market. Some experts feel that consumer stocks are priced to perfection.
Well, what is priced to perfection, I don't know. But I think, see, all of them are good quality stocks, good governance, good cash flows, reasonable growth. So I personally think there could be some correction in their P's. Or surely they are going to give a return which is equivalent to their earnings growth.
But the India romance is clearly the consumption story, so don't be bearish on consumer names.
Well, in that, boss, with this kind of price performance, I am not going to be bearish. And technically they are showing no weakness, nobody is overbought, there is no manipulation. So how can you be bearish? Price is price.
Secretly, are you happy that your top 3 holdings are marching towards the new all-time high? It's been a great year for you.
Yeah, it's been a good year. God has been kind. Actually, if the stocks don't go up, you feel happy.
You know, over the years I've interacted with you, you've always maintained one thing that, look, I'm not married to any of my investments. But as of today, do you have visibility for your large 3 investment for next 3 years based on earnings?
Well, I don't know whether visibility for next 3 years, I have visibility for next 7 years. I think they are doing well if they are linked to the Indian economy. And I am happy, I'm quite confident.
I just wanted to understand the overall approach a retail investor should adopt now.
Well, you should invest every month. You do take the SIPs.
That's the
Because see, one thing you must remember, India is in a long-term bull market. And predicting, time to time the market is difficult. So the question is, if you are in a long-term bull market, I think you should invest every month regardless of the index situation. And I am hopeful people will get return between 15 to 24% on a compounded basis.